Welcome, everyone. I'm Barry Boswell, the Chief Trader for Market Authority and the editor of the Speed Retirement System. Now, today I have the good pleasure to interview Nicholas Santiago, President, CEO, and Chief Market Strategist of In the Money Stocks. Nicholas specializes in technical analysis and is an expert in Gann theory, the Elliott wave principle, Dow theory, and cycle theory. He swing trades and day trades large caps along with commodities and currencies. He began trading in 1991. In 1997, he became a licensed Series 7 and 63 registered representative and managed money for a large private client group. After applying his knowledge to his client base, he began teaching his market trading tips and methods. In 2007, he partnered with Gareth Soloway to form InTheMoneyStocks.com, a research and consulting company focused on guiding investors, swing traders, and day traders to financial success. Known for his master cycle dates and proprietary count systems, Nicholas developed these methods over years of study. Today, his members are enjoying the rewards. If it has a price, pattern, and time alignment, he's probably making money on it. Thanks for joining me today, Nicholas.
Oh, great to be with you, Barry.
Listen, Nick, let me get right down to it. It's very compelling, what you've done here in the markets. And what compelled you to actually start getting into the markets and trading the markets?
Well, I was always fascinated with the market since I was in high school, believe it or not. I used to belong to what we called the Distribution Club of America, and it was very business-oriented for students that wanted to go into business. And I always found that price action was pretty remarkable, how a stock can go from, say $10 to become a $100 company at one point. At that time, the '87 stock market crash took place, and I was really fascinated and drawn in to see how quickly markets can go down when they do fall. So I guess I was hooked as a high school student, but later on, in 1990, I became friendly with a doctor who was a big investor, and he actually gave me a tip on the stock, and I had a few dollars from my graduation, and I put the money into that stock, and the stock skyrocketed, and I made some money there. Safe to say, it was a great investment. It worked out. But only a year later, I lost the entire investment on the very next trade. So I learned that it was a humbling profession, but I guess that's what really piqued my interest in the very beginning.
Yeah, it must have been exciting to win, and then quite discouraging to go out and implode that.
Well, actually, it was the best thing that ever happened to me, really, when you think about it.
Yet from that experience, did that compel you further to learn really how the markets work?
Oh, absolutely. At that point, all I would really do was study and research companies, would look at balance sheets, and I would do the same thing that most people do. I'd look at earnings per share, earnings before interest, taxation, and amortization. I would look at PE ratios, book value. Nowadays, I haven't looked at any of that stuff in probably 13, 14 years, and I don't know if I'll ever look at that stuff again. So a completely evolved trader, if you so to say, from that very beginning.
Well, Nick, let me ask you this. After this experience with this doctor friend of yours, was there anybody that you studied under or came under their tutelage? Did somebody else become a mentor to you at that point?
No one really did. A little bit later, I had met up with a bunch of, I would go to a lot of trading conventions and things like that, and I started to study Elliott wave, which I find still to this day to be a very hard theory, as most Elliottians don't know really where they are outside of the impulsive three wave. But what I did do was I took a little bit from everybody that I could find, and a lot of the old timers. I would read a lot of books about some past traders, John Templeton, and really that's what I did. I just started to study a lot of old traders, Jesse Livermore in particular, and I would watch some of the mistakes that these guys made, and some of the real gains that they had in the market and how they handled it. And once I started to put things together, I got a little bit better. You know, it's still a humbling profession. I don't get it right all the time, but when I do get it wrong, it's very, very small, and that's the difference. I think that between success and failure in this business is when you're wrong, you're able to be wrong in a small way, and when you're right, you're able to capitalize on a larger gain.
You know, is there any book or piece of literature pertaining to the markets that you would recommend to people that you thought was extremely helpful to you?
I would. There's a book that's not very old, and I read it probably in the early 2000s that I always recommend it to all of my traders that study under me. It's called World's Greatest Stock Trader, Jesse Livermore, World's Greatest Stock Trader, and the author's name is Richard Smitten. I would recommend that book to just about anybody in the world. I think it was well written, and it just tells you more so about the life of a very, very, very successful man and how he winded up really, you know, at the end of the story, he kills himself and he dies of depression. But basically what he did was he was able to really come from very humble beginnings, make a fortune, but by the end of his life, by not following the rules of trading, he really destroyed his fortune. And I think that's a story that everybody should read, and it's a true story. It's factual, and it really will resonate with most traders out there.
I haven't read that one on him, so I'll be sure to grab it.
Yeah,
but let me ask you this. You know, Nick, let me ask you this. In terms of, you know, the average investor today, what obstacles do you see them facing as they try to enter the markets and try to conquer the markets?
I think the biggest obstacle is getting caught up in the media hype. You know, you have a lot of these shows on television where the talking heads are, you know, upgrading things and downgrading things, and the sentiment out there. You know, the truth of the matter is the market, as chaotic as it may seem, has a rhythm to it. And the biggest pitfall for most people is to get caught up in all the, you know, the media hype and the talking heads on television and the nightly news, and you know, watching, you know, the Dow Jones, which is just 30 stocks that are price cap weighted. But that seems to be, you know, the biggest pitfall. At least I see it with new traders. They'll say, Nick, why are we doing this when, you know, so-and-so on TV said this is going to happen, or CNBC said that this, you know, was going to happen? And I said, well, you know, you really just want to follow the charts, the price action. You want to follow the institutional money. That's who's going to move markets. And in my opinion, you try to make it as simple as you can, and try to keep all the complicated stuff out of it, because complicated stuff, in my opinion, for me at least, it just doesn't work.
Yeah, it's probably wise advice. Keep it simple, stupid, if you will.
Yeah,
but
pretty much.
you know, it's interesting, Nick. You've been trading about 10 years. You know, isn't it?
Longer than that.
I'm sorry?
Longer than that.
It's
Much
actually longer than that. But, so you know, you kind of lived through the big bull market that started in '02, and then of course the huge sell-off we had starting in '07. I mean, and then of course, you know, we've had the nice rally off the major bottom back in '09. So, you know, there's been different cycles to the market itself.
Mm-hmm.
I mean, have you found your trading style to change based on the markets?
Somewhat. In the 90s, I would hold things much longer than I do today. In the 2000s, when the market topped out and we had the bear market from 2000 to late 2002, early 2003, you could see that you know, you want to shift your momentum more towards the downside, and again, downside action is usually much faster than the upside action. And then, but it really just, I try to go with every cycle. So, you know, right now we put a pretty good low in March 2009. That low has held. We probably have, you know, what I like to tell traders now is we just trade these inflation rallies, and when these inflation rallies get exhausted and the dollar needs to start moving higher, that's when we sell the markets. And you know, we've been very, very successful. Most notably, you know, even in 2007, believe it or not, if you check it on YouTube or, you know, archive our site, but you know, we call the exact top of the market in 2007 to the day. And that's something I teach the traders that come over, how I did that. And, some of them now, predict market tops and bottoms. Not that that's always a winning recipe, because you could always be wrong, but it's always good to know exactly, what kind of energy is out there, if you're going to have downside energy in the market or you're going to have upside energy in the market.
That's fantastic if you're able to nail the top to the day.
Yeah, we did. And
did you nail the bottom?
We did. We nailed that to the day as well.
That's fantastic. So you guys were shorting all the way down then?
Yeah, we actually played a few bounces in between in 2008. I believe, in fact, one of the best calls we ever had, besides nailing the 2007 top to the day, not only to the day but to the price, but one of the best calls we had was in March 2008 when Bear Stearns was taken over by J.P. Morgan. It was a Sunday night. That Friday night, we had issued an alert out there, and we told our traders to go long on Monday morning. Now, I had no idea that J.P. Morgan was going to take over Bear Stearns for $2 a share at that point. Later, I believe they paid $10 a share. But either way, I had no idea that was going to happen. But just using the cycle theory, it told us that the market was going to have basically a 2-month bounce. And the market did rally from that date, I believe it was March 10th, all the way into May 19th. Now, the one mistake I made was in May 2nd, I started to get bearish again, which was a little bit early. But the financials actually topped out on May 2nd, but the overall S&P 500 did not top out till May 19th.
Well, I got to tell you, that's pretty remarkable if you could catch the major top and, of course, the major bottom. I mean, is that based on your Elliott Wave work, or is that just your cycle work?
That's just a cycle work. That's just a cycle work. I don't use Elliott Wave as much anymore, but I still have a real good understanding of it. I probably know it better than the average person out there. So I mean, I will still consider and look at Elliott Wave for you basically get a nice 5 pattern down. You could start to look for a bottom there, and if it can coincide with the cycle date, it's actually going to be even stronger, a stronger move. So for instance, if you looked at gold recently, you could just take a look, and I did a radio show, and I had told them that the short-term bottom for gold would be on March 29th, and that was basically just looking at an Elliott Wave pattern there, and I said you'd get a corrective move up. And actually, I was on that same radio show and told them to be out of all your gold by Tuesday, and you could see what happened here in gold on Wednesday. So, sometimes it's pretty effective, but to be honest, Barry, there are times I get it wrong too. It's not perfect.
Well, I don't think there's anything in the market that is. I mean,
absolutely not. There's no holy grail. I mean, you could do the best you can, put as many factors, supporting factors together to take a position or a trade, and that's what will ultimately make for a good trade. And then if you're wrong, I mean, you just have to move out, and you have to be able to stop out, and that's something that is very, very difficult for a lot of traders. Once you can do that, though, I think that's the first step to success in this business.
Well, it's interesting. I'm looking at a monthly chart of the S&P right now, and you can see off the bottom in 09, we've kind of come into the 5th wave up here. So, I'd be curious to see where you felt the market would kind of extinguish this last rally. You see any more legs in the market, or do you think we're kind of slowing down?
Well, I think we're toppy right now, but I do think that after you get a pretty decent correction over the next few months, you'll get another inflation rally to take us up again into 2013. So, I think that will be the biggest inflation rally that we've seen since the 2009 lows, in fact. And then, this market will be headed for trouble again. Unfortunately, that's just the way it works. When you get these major downturns like this, these take real long, a real long time to get the economy back in shape. But ultimately, I'm starting to turn bearish now. But at the latter part of the year, I will start to turn bullish. Say the fourth quarter.
Well, let me ask you. Let me ask the average investor, the guy on the street who's trying to beat the markets in effect. What do you think their biggest problem is when it comes to trying to do that?
Well, the average person on the street, and this is John Q. Public, is that they're going to buy the highs. They're going to buy the extreme highs. So, just yesterday in the market, I think I saw, well, I had some emails sent to me, and they said, market's been upgraded by this guy, and this guy. It was 1,500, 1,750, and 2,400 by the end of the year. We're not even back to the 2007 top, which was 1,576 on the S&P. So, I never know how much inflation is being created in the market. Therefore, I don't really care about how high it actually goes. I will find the resistance points when it does move up. But more importantly than anything is to know the time that something can move up. How long can something go up? What is the duration of an up cycle? What is the duration of a down cycle? And then, I don't really care about how high or low something goes. But I mean, I've heard some ridiculous numbers, even, in 2011, the presidential third year, the presidential cycle, the market is always, up 20%. Again, you just want to follow the cycles. Last year, we nailed every single cycle date there was for the entire calendar year. And, that's if you can do that, you're going to give yourself a real good chance to win in this market. Now, I still had a few losing trades, but there weren't all that many, and when the ones that did lose were just, less than, 4%. So that's really the key, just to know the duration of a market move. How long can something move in one particular direction before that energy shifts and changes? And if you could do that, I mean, you have a real chance. But the average person out there, I really don't think they stand a chance unless they sit with buy and hold. And, I guess if you got back in 2009, you're somewhat recovering. But if you bought in at the high in 2007, you're still in a lot of pain right now.
Right. Are you more of a contrarian, Nick, when it comes to investing?
Oh, yeah, definitely. And without a doubt. When I see people, all these, you ever see, in fact, I'll give you a good example here. It was, if you take a look at the GLD, or you could take a look at gold futures, whatever you want, you'll see back in, I believe it was in September, J.P. Morgan upgraded gold to $2,500 an ounce. And the truth of the matter is, I was shorting gold at that point, or having my subscribers short gold, and gold topped out on December 6th. Whenever you get these extreme high prices and you get these upgrades by these big firms, it's usually a top. You could go back to 2008. Goldman Sachs upgrades oil to $2.50 a barrel, and 4 days later, oil tops out at $147 a barrel, and proceeds all the way down to $30. So go back and look at a chart of Google. I mean, people were stumbling over themselves, these big firms, to upgrade Google back in 2007. When it was trading at $750 a share. And shortly later it falls over. So I'm absolutely 100% a contrarian. The more I hear on TV, the less I'm following.
Well, that's probably worth the price of this interview alone, quite frankly. And I have to tell you, Nick, it's a story I've shared with many people. I mean, I remember being out to dinner with a group of friends 2 weeks before the bottom in '09. And a friend of mine who had a substantial stock portfolio said he threw in the towel, sold everything. Mm-hmm. And at that point, I said, well, I know the bottom's coming.
That's it.
And 2 weeks later, that's when the bottom hit. And I said, here it is. And, that's invariably what happens, I think, to the average investor. I mean, they finally throw in the towel at the worst possible moment when the pain is just too excruciating.
You're 100% correct. I mean, the same people ask me, Nick, what was your greatest trading year ever? Was it '99 or, and I say no. Believe it or not, my greatest trading year ever was 2003. If you take a look at the chart of the S&P 500 in 2003, you'll see that we put a low in March, and we rallied all the way up for, almost, I guess, all the way up to January. And I was buying probably the worst stocks in the world, just absolute junk at that time, because the cycle had told me 2003 is going to be a power wave to the upside, and sure enough, it was. So, I mean, again, in 2003, you could just see the bearish sentiment out there was just absolutely, as high as it ever was. So, and that was the time where you got to step in. It's not an easy thing to do, but it's you know, like you just said, when your friend said he's out, you know he picked the dead low.
Yeah, it's uncanny to me how often that happens. I mean, it's just remarkably accurate. You know, when you use that as a contrarian viewpoint.
You know, another.
But it's interesting.
Go ahead, Barry. Go
I'm
ahead.
sorry, Nick.
I was just
I
going
was going to say.
Go ahead, pal.
We could do this dance all day, Nick.
Yeah, we could. Go ahead.
Go ahead. No. Finish up what you're going to say, and I'm going to ask you a different question pertaining to that.
Oh, I was just going to say that one of the things I show traders is very funny. I show them the Time magazine cover from June 13th, 2005. It was a picture of a man holding his house, and the cover stated, "We're going gaga over real estate." And, you know, at that time I had been shorting real estate stocks, and honestly I was getting stopped out constantly, and I said, this thing's got to end. The cycle's telling me it's over. What is going on here? But when I saw that cover on on the front of Time magazine, and it's June 13th, 2005, any listeners can go and check it themselves. The man was holding real estate. He was holding his house in his arms, and he said, you know, big money in real estate. We're going gaga over. And when I saw that, you know, that often marks the top as well. You know, when you see a big, prominent magazine, and they're parading this big housing boom, and you know, if you take a look at a chart of, say, Toll Brothers or something, you'll see that it topped out in August of 2005, and the housing stocks, you know, really tanked at that point. So it's pretty incredible how it works.
You know, it's interesting that you brought up real estate, because obviously that's a market that's been in the, pardon the word, but the crapper for a long time now. Okay, and you know, I'm interested to hear your viewpoint as to where and when you feel real estate is bottomed or will bottom.
Well, I do cycle work on that as well, and I think that real estate probably bottoms, you know, generally sometime next year. Property has real value. You can grow things on there. You can put livestock on there. I feel that I've been nibbling on real estate now myself personally. This year I bought a couple of properties already. So I'm in the camp that real estate is close to bottoming. Plus, I happen to know quite a few people that are no longer paying their mortgages that are professionals and have more than enough money to do so, but they feel that they're so underwater on their home that they're backing away from it, and just that sign alone tells me, you know, I think 2012 is the low for real estate.
You know, it's funny. I tell people, and it kind of goes back to what you were commenting about with the Times article, that to me, you know a real estate bottom is becoming imminent when you start seeing your ads for these guys running foreclosure seminars.
Yes. Very true.
And what's really kind of hysterical about that, Nick, is about 3 weeks ago I saw my first full-page ad about how you can pick up properties on the cheap. And I laughed because I remember back at the height of the market, you know, if you turned on late-night infomercials, like every other infomercial was a guy hawking a real estate no-money-down system.
Yes, yes.
And, you know, I said, quite frankly, you know, you're not going to time that to the day. I mean, obviously, real estate's not like a stock that can bottom, you know, and turn around to the minute. But, you know, that's a precursor to me that a bottom is imminent. And, you know, just as a quick follow-up to that, it's funny. I saw a little blurb with an interview with Warren Buffett just the other day saying that if he had the wherewithal to be able to manage single-family homes, he'd buy a portfolio of 300,000 homes.
Yeah, I heard that. I did see that as well.
And I thought that was quite interesting because to me, I guess what I'm saying is I kind of concur with what your synopsis is here. And, you know, I think the bottom is coming soon. And I think personally that when real estate does finally bottom, that's going to help the stock market as well.
Yeah, I agree with that, and I would probably, as I said, you know, look at probably a little bit later, later this year. I think, at the end of the year, there's going to be a big inflation rally, in my opinion. We've already had one already, obviously, now, but this one should start to dwindle now. But we'll get a big inflation rally, and real estate's going to be a big part of it, and that's going to sustain the market for a while and until the next bust. Unfortunately, the next 10 years, we still probably have, if I'm correct, I think 3 more bust cycles. So, I mean, there's going to be good opportunity. I mean, for me, a bust cycle is fantastic because there's opportunities on both sides of the tape. You get to trade the greed and the fear, and that's really what you want to do as a trader.
Is there any one side you prefer, long side or short side?
Well, I actually like the short side a lot because it's so quick. I mean, there's no waiting. The money. I mean, if you're right, the moves are very, very fast. So I guess I've become a little bit accustomed to the short side since the 2000 top. But it's easier on the long side overall for the average person. Obviously, everybody's always optimistic and wants stocks to go up. You don't ever hear anybody, on CNBC touting, oh, the stock market going down. I mean, they're only touting the stock market going up. So, but for me, I think the faster money is made. I don't really have a preference either way. I just always want to be on the right side of the trade. What I always tell people is if the Dow goes to 50,000, as long as I'm on the right side, I don't care. If the Dow goes to 5, I don't care as long as I'm on the right side of that trade.
So you're really flexible in your trading and your approach to trading.
Absolutely. You have to be. If you form an opinion in this business, you're not going to last. You have to be very, very neutral-minded. When the markets say it's time to go long, you go long. And when the markets say it's time to get conservative and even sell short, you get ready to sell short. That's the way I believe everybody should be. Remember, we trade because we look to make money. We don't trade because we want to force our opinion on the market. That's just not going to happen. But you see a lot of traders, and I know a lot of professional traders that do this, multimillionaires that have made and lost fortunes because of their opinion. And I just like to be steady and just row the boat ashore and bring me to the promised land there each and every time. That's what I strive for. And if I'm wrong, I'll be wrong small.
Well, let me ask this then, Nick. I mean, if you have the ability to literally pick the day of the turning points, and I'm talking major turning points, I mean, somebody listening to this would have to say, how could you not make money?
Well, that's true.
So you must have a significant track record. I have to.
Yeah, I mean, everything's logged in our website. I mean, you could go back and look at every single trade there. So I mean, we've got it all there. We've done pretty well. I mean, you're not gonna hit a home run every time. And even I was just recently in a trade on the BOM. It went from 1050 to 1250, and I was we took half the profits off the table, and we were holding the second half with a break-even stop, and that's kind of the way we like to do things. Once we're in the money, we secure a little profit, and then what we do is we just move that stop loss to break even. And that's really what you want to do. And if you're wrong, you have a hard stop, and if the price gets down there, you stop out. So, you're never going to hit them all. There's sometimes you'll just be dead wrong. There was a time I was just dead wrong not too long ago, right before the holiday. I was looking for a turning point on December 19th. So I entered a trade on Citrix Systems, which is a stock I like to trade a lot, and I like the upside on that stock a lot. But that day Oracle came out with some news, and Citrix System gapped down, and I got stopped out, and only to see the stock reverse the very next day in my favor and go there. So I mean, those things can happen. It's just part of trading. You're not going to be perfect all the time, but for the most part, you try to do your. It takes work, though. That's the one thing, Barry. If I could tell you, the trading day is the easy part of the day. It's the work that comes at 4 o'clock, to 7, 8, 9 o'clock at night, and my wife's saying, "Hey, you ever going to get out of that office over there? Come spend some time with me and watch a TV show." But you work very hard, and you put in the legwork, and you do the calculations. You could be a success in this business.
You know, it's an interesting regarding your trading strategy and what you're doing. So you're letting a portion of your position go. If you're right, you're going to capture a big part of that move. And I
Right.
assume you're going to trail a stop up then.
Yes, absolutely. You trail a stop, and that's what we did with BOM. I was in BOM. I nailed the bottom to the day at 1050. Traded it up to 1250, and at that point, I did not get out, and I just moved the stop loss up to 1150, and we got 1125. Excuse me, and we got stopped out at 1125. But either way, we locked in a gain, and you know that's the end result of the business. Is you want to lock in gains if things start to come back against you, and that's most important. But that's my theory, and that's how I day trade. Anybody that's ever come in, we take day trade a couple trades every day, and we take half off the table, lock it in when we have a gain. We always have a hard stop in case we're wrong, and we let the second half run, usually to a pretty good calculated objective. And if that works out, then we capitalize. If we get stopped out, we trail that stop loss, and so be it. We got stopped out with a gain for the most part.
Well, it's interesting. It sounds like you're trading multiple time frames. You're trading intraday.
Absolutely.
You're trading swing trades.
Yeah,
so
I really
seem
don't.
like you're doing a lot of different strategies.
Yeah, I'm a day trader, which a scalper, which means I'm in and out of the market from either a couple of minutes to a few hours. By the end of the day, though, I'm usually out, and then I'll have swing trade positions, which I'll hold for usually a few days to a few weeks, and that's the kind of trading that I'm doing right now. But the long-term holds, I don't do. I love swing trading because you try to capture that quick move, which will happen within a few days to a few weeks, and then you look for the next setup on the charts. But really, it's price, pattern, and time being the most important, obviously. So if you could calculate that, and it's not easy, but if you can do it, you're going to actually hopefully, I believe you will, you'll be successful.
Do you ever use options in your strategies?
I used to trade options quite a bit back in early 2000s, all the way up to probably 2005 or 6. I don't trade many options anymore. I will do them from time to time with a simple put or call if I see something that's extremely overbought, oversold, and I come up with a calculation and some time. Instead of risking, taking a short position, I may just risk it with a put if I'm looking to sell something, and I'll buy a put there, and I'll only risk the premium. So there are times that I will do that. In fact, I'm looking to do that with Apple, as I think Apple's overcooked. It may have a little bit more upside. If it starts to base, I'll have to watch it. But I'm looking to maybe buy some puts on Apple because it's just a little extended on the monthly chart for me. And I don't think the price has ever been that extended, so I would watch Apple. If it gets a little bit higher, I would consider buying some puts on there for a trade, not for the end of the work, to hold forever, just for a trade.
Well, how many trades a week are you typically doing then, Nick?
Well, scalp trades, probably you could get 3 to 5 a day on average, and then swing trades, you're probably looking for maybe 2 or 3 a week, if you can find them. If you can find the right setups. Right now, I've been a little bit slow because I'm looking for a turning point in this market now. I'm no longer bullish. I was bullish into the end of the month of February, but I'm no longer bullish on this market now.
Well, if somebody came in and wanted to trade your strategies, I mean, what size account do you really feel you need to do that?
Well, we cater to anybody. What we always tell traders is whatever your account size is, it doesn't make a difference. If it's $10,000 or $10 million, we have traders in our with us that we know are just novice traders, and they have a small account size. And some, quite frankly, we have, I think, 3 billionaires. So, what we always tell them is in any one swing trade position, don't use more than 10% of your capital. And that will give you a chance to always get into other positions. It will also keep you safe in case a position doesn't work out for you and you do take a loss. But that's our rule.
So you're primarily trading equities.
Yeah, primarily trading equities, but it doesn't matter what the same methods, the same methodology can be used for forex, commodities, futures, makes no difference. We have commodity traders with us, we have forex traders with us, we have stock traders, and we have we have currency traders. I mean, everybody's under the sun. It's all the same methods. Nothing really changes. We could trade rocks if we could put it to a chart.
I really love your attitude, Nick.
Thanks, Barry.
I got to tell you, I really love that. Are you focused on a certain stock size? Is there certain qualifications you need before you consider investing in stock, or does it really matter? Could it be a low-priced, high-priced stock, or is there?
Well, my partner he loves these small-cap stocks personally, and he's probably the best in the business that I've ever seen. He loves to trade these small-cap names that are real companies, but he likes to trade small caps. Me, on the other hand, I like large cap stocks. I like big stocks. I like things with volume. I like stocks that trade over 1 million shares a day. Those are kind of my criteria. I want things that are active. I want things that are having a lot of institutional sponsorship and participation. I think that's where you get the best reads on the chart, when you have an active stock. So, you might have a stock like Chipotle Mexican Grill, which people love, but it trades, 400,000 shares a day. I don't trade those things. It's just not. Yeah, I just don't have the institutions working there. Now the thing's in a great uptrend. It's been moving higher. Yeah, it's fantastic, but I can't trade a stock like that. I need something that, like a Freeport-McMoRan, BHP, some JP Morgan. Those are the things that I like to trade. Amazon, Apple. Just give me something with volume. Give me something that has institutional sponsorship. Those are the things that, personally, for me, that I prefer. But the methodology still will work on, even on a lighter trading or a lighter volume name. But I like institutions to move the stock when I see that the pattern's going to go that way. And usually, I could pick it out, but not always. It's a humbling profession sometimes.
Yeah, well, I'm certain that's an understatement. But let me ask you this, Nick. In terms, when you're entering a position, is there a certain risk parameter you're looking at when you put on a trade?
Absolutely. Absolutely. In any position that you're in, you should identify where you're wrong, and that's the most important thing, in my opinion, before you do anything. If you look at any particular stock, it doesn't matter where it is. Before I even get into any trade or give any trade out to traders that are with me, what I do is we calculate where we could go wrong, and usually it's a technical level. If it gets down to a technical level, usually that is where I'm wrong, and that's the most important thing, to make sure you have a good risk reward, but know first, before you even get into the trade, if this trade goes bad and I am not reading this thing right, where is my exit point? Where am I going to take the stop loss? And I drill that home to traders just about every single day, as I see traders only dreaming about the upside or what they're going to make, and they never consider what they're going to lose. So before you do anything, always know where your exit. Always know what your exit strategy is on any trade.
So your exit or risk point on every entry is going to be different.
Absolutely, yeah, absolutely. Well, you're going to have. Well, you got to remember, you could be trading a stock that's $30 a share, $10 a share, or $500 a share. So you're going to have, you're going to look for on the chart for the technical stop out. If you're unable to find a technical stop out, just say you have a new all-time high like Apple, then you have to have a numerical stop out where it's mathematical formula that you're going to use and say, all right, is it 3%, 4%? But I usually would try to figure it out using some of my techniques that I've developed over the years to figure out where that trade has gone wrong.
Right.
But you have to know your stop out point before you even get in.
Can you share with me kind of your best trade, or what you consider to be your best trade?
Ever?
Yeah. I'd be curious to hear your input on that.
One of my best trades ever really was a day trade. It was I bought LSI Logic. I'm going to say it was 2005, but it was off of a breakout pattern, and I just saw the pattern on the chart, and I said, all right, this should break out, today or tomorrow. and I placed a pretty good size trade on there, and the stock broke out about $3, and in just a few hours, and you had time to get in. It didn't break out till around the noon hour, and it just took off to the races. And from there it moved up about $7-8, and it was about a 1-week trade. So that was one of the better ones. But I've also had some swing trades where they've gapped down. Nutrisystem a while back was a trade I took, and it gapped down about 12 points, and had a decent size short position there. And so I mean there are a lot of good ones. Those Grand Slam home runs, though, they don't come along too often, unfortunately. That's how I'm even able to remember them. But I wish they did, but it doesn't always happen like that. I'm also happy just scratching 5-10% winner every usually that's what I'm looking for in most of my trades.
It's interesting. I was reading that last year it's interesting because the S&P 500 basically ended the year within a point of where it opened for the year.
Mm-hmm.
And it was a real tough year for a lot of professionals.
Yeah, most hedge funds finished lower, finished negative returns, had negative returns for the year.
Yeah, and I'm just wondering, how did you do in 2011?
It's a banner year. Banner year, not only for me, but my subscribers had a banner year. We made one real blip in 2011. Like I said earlier, we pretty much nailed every cycle. Again, traders can go back and look at our website, and you can see everything's there. It's time-stamped, archived. But the only mistake we really made in 2011 was we were short the S&P in early October and early August, and we covered it around the 124 level, and it crashed and went down to 110. That was the mistake, but we kind of made it back up on September 20th. We called for another move back down into October 4th, and that was good. We made it back there, and we traded that SDS a lot, which is a double short S&P 500 vehicle, and you go back and check it all out and trade it. Anybody listening can go back and look at it. But banner year for 2011. Like I said, that was the only blip we made, was getting out too early when the market crashed in August. We got out, basically a day before, and we put a couple of longs on there, and we got stopped out. So that was the mistake. For some reason, I just didn't have crash cycles built into the cake, and it took 3 days, and we were down all the way to the near the 110 level on the spiders. So that will happen from time to time. Like I said earlier, it's a humbling profession. You're never going to be 100% correct in this business, but if you get stopped out, you get stopped out, and you have stops for that reason.
Yeah, because that downdraft we had into October was particularly sharp, and it's interesting that you were looking for a turning point, because I remember at the time a lot of the pundits, the talking heads, the media were really talking about a resumption of a major bear market at the time.
Yeah. And we were looking for a final low in the market at that time. Not a final low, but a low cyclically for the market at that time. And I can show you exactly how I did it, and knew that October low. I sent out an alert, in fact, on October 4th before the market opened, and told my traders, start to cover your short trades today, because if you take a look at the S&P 500 E-mini futures, you're going to see, while everybody was looking at the S&P and the spiders, but the futures were making a double bottom, and often when you come down with momentum, you'll take out the low by a little bit, and then the market makers will go in and, as people go short at that point, the market makers will start to buy the market in force, and then the shorts will be forced to cover and usually have a big up day. So that's exactly what happened, and I put a note out. In fact, again, go back and check it. You guys can see the note I put out. But told my traders, on all your shorts trades, just tighten up the stops right now, and watch for the market to possible turning point here off the S&P 500 futures, double bottoming from the August low. And that's exactly what happened. You took out the low by a little bit, which is, we call it a little fishtail, and then the market makers take it back up. So far so good. It's been a great 2012 so far, and we'll see where we go here, because as I just stated to you on the record, I am not bullish this market anymore right now.
Yeah. Well, do you know, if we do reverse here, what's your opinion? Do you think we're going to have a big correction, or is it going to be a minor correction?
Well, whenever you put in these highs like this, you'll get some minor corrections in the beginning until you get some higher lows, some lower highs in place. When you get lower highs in place, then you could build some momentum for some deeper declines, and I think that's what's coming. And then, you know, as I said, and I've openly stated this not only to you, but even on some radio shows that I've been on, that I think we're going to get a big inflation rally in the latter part of the year, and that's, you know, all cycle work that's telling me this.
Well, to trade your strategies, Nick, do you need to be at a computer all day, or can you just do your swing trading?
No, you could just do the swing trading. I mean, we offer a couple services. If you want to come into the intraday chat room, you'll see that you know, we'll show you our desktops, and we'll show you exactly what we're doing every day intraday. We'll also give you some swing setups there, but we have what we call, you know, a research center, and you come over and you can look at our swing trades every single night. We'll post them up, and that's for the person that, you know, is not a full-time trader, and they still want to trade. So you know, they usually have regular jobs out there, and they'll come in. You'll see all of our research that we put out. We put out tons of content each and every night. So like I said, my day really begins at 4 o'clock when the market closes, because that's when the real work begins to figure out where this thing is headed.
So your entries, are they very sensitive when guys are entering positions? Do they need to really get off execution really fast?
No. I always give an entry beforehand. We always give out, you know, an entry beforehand. Enter here, unless we see something that we intraday, then, you know, we'll probably just say, you know, buy it at this, you know, in this range or something. But generally, we never really have trouble getting filled. Even, you know, I always give them a broad area where to get filled. You know, look for an entry around this level, give or take, you know, 10, 20 cents, and it doesn't seem like there's been many problems with getting fills. And like I said, small caps, if you trade those, my partner will do those. He'll give you a range where you should look to enter, and if you don't get filled in that range, you kind of just leave it alone. But I don't think we've really had any issues getting filled. It seems like we're you know, and for me, I trade the active names. You shouldn't have any problem.
Okay. Nick, can you share with me any trading tips that you would highly recommend to people?
Yeah, one thing you always want to watch for, if I could, is to look for what I like to call inside bars, and you look for how a stock is consolidating from. So say you have a major move up, for instance, and then you want to see how a stock consolidates within that major move, and if it can usually, what I like to call bake in the oven for a trading term, something I use with my traders is, you let it bake in the oven. If you can see how that stock is consolidating, usually the market natural ebb and flow will want to resume that same move again. Whether it's to the upside or the downside doesn't really make a difference. I'd also tell traders to always watch your moving averages. If you have moving averages that are separated and they're both going, you know, from the lower left of the screen to the upper right, that's telling you there's a good uptrend. And if they're going from the upper left of the screen to the lower right, that's telling you there's a good downtrend. So you want to watch that trend as well, and know, you know, it's always a little bit tougher trying to fight the trend. I do a lot of counter trend trades when the time is right, and I believe that the trend is your friend until the end. So, you know, all traders, especially if you're a newer trader or you're a beginning trader, you want to always stick with the trend.
And are you analyzing the trend on various time frames, or are you strictly looking at one time frame?
No, I believe it or not, I have at any given moment right now. If you were to ask me, Nick, what's the time frame on the S&P 500 E-mini futures, I have up the 10, the 60, the daily, and the weekly all simultaneously. They pop up right on my screens as soon as I click the button. I want to see all time frames. Now, if you're a day trader, that's what you need. You need to have those simultaneous time frames up. But if you happen to be, a swing trader, then you really want to focus more on your daily, weeklies, and sometimes even your monthly charts.
Gotcha. Well, if you were to give advice to a relative or a close friend who wanted to get into trading, what advice would you give them?
Start very, very small. Use very small position size. Like I said, my rule generally is whatever your swing trading account is, or whatever your overall account is for swing trading, never use more than 10% of the capital available in any one position. Also, make sure that a trader, knows where they're going to go wrong, know where your stop out is going to be, know where your mistake. We're not like Warren Buffett, who has, is worth $60 billion. He could go in a Goldman Sachs trade at 125 and let the stock fall to $48. The average person just can't afford to do that. And if you bought the stock on margin, you won't be able to do that. So, again, you got to know where you're wrong, and you're relatively. I like to use a hard rule of you never ever risk. If you're down 10%, you should be out of that stock. You should not be in. You never just live in more. If I learned one thing from reading that book I brought to your attention earlier, is that never lose more than 10% in any given trade. That's the kiss of death.
Well, I'll tell you what, you've been really very forthcoming here, Nick, and I think this has been really enjoyable and I think very valuable, and you've really shared some great tips. Just in closing today, I would like to ask you just one final tip, one final question, really. What would be the biggest tip you could give somebody who's just starting out in the business?
Biggest tip I could give anybody just starting out in the business is get educated first. Pay a small amount of money for an education before you pay a big amount of money in stock losses. And that is probably the most important thing. If you remember when we first started this conversation today, I talked about how my first trade was a home run, and I gave back all that money and then some within a year. Learn from my mistakes. Don't learn from, try to learn from other people's mistakes and not make the same mistake that others did. If you can do that, you're on first base to getting around all the bases and being successful at this business. But get educated. That's the most important thing you can do. There's more than one way to skin a cat in this business, I'm sure. There are so many different methodologies out there. It doesn't have to be my methodology. But just get educated in this business, understand the mechanics of why price action happens, and then you're obviously going to be 10 steps ahead of the average person who's just willing to throw money in at the market.
I think that's very wise advice, and I thank you for sharing that. But listen, I have a great time here today interviewing you, Nick, and you've really shared some valuable insights. And I hope that people actually listen to what you're saying, because I think it's very important and important for their long-term success in the markets. But I want to thank you, and I want to wish you all the best, and hopefully you can continue to nail those turning points like you have.
Thank you, Barry, and thank you for having me. It was a lot of fun, and I always enjoy speaking, to others about the market. As you can see, I'm very passionate about it. This is what I do. This is I used to look at my dad, who was one of the hardest workers, and he instilled in me years ago when I was a child that he always used to say to me, son, as long as you're willing to get up every morning and go to work, you'll never have to worry about, anything in life. But I knew he never loved what he did. I know he never loved his job, and the man would work 2 or 3 jobs at a single time. And I love my job. I wake up every morning enthusiastic. I wake up every morning. Sometimes I can't sleep at night because I just got to go and do more. And to be able to do that, to do this for a living, and to be that excited about my work, it's really, I feel like I'm the most blessed person in the world. And if I could shed that light to somebody else and help somebody else out, I believe the more you give out to the universe, the more you get back. And if we all did that, the world would be a better place. So appreciate you for having me today and sharing this with all your listeners.
Well, thank you very much, Nick. And listen, best of success and continued success, and hopefully we'll get a chance to do this again.
Very good. Thank you very much, Barry.
Have a great day.
You too.
Bye now.